Right.
And now they're assessing how much damage it's doing to the economy before tariffs. And this is the thing, like we know a lot of the supports have been rolling off at the start of this year. That's why consumption's down. And then you'd actually start to see real trades happen. And so maybe home prices
There'd still be so much more demand than supply, even if supply gets unlocked. Chartkin Matt made a chart that I smelled it was a timely special. And of course, all credit.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.
He said, I'm not looking at the stock market at all.
Totally not looking at the 200-day moving average.
Yeah. Do you think that he expected this much of a stock market uproar? Or do you think he didn't think that much about it and just said, I don't really care about that?
I think that they thought one of the collateral hits to this would be the stock market. Because if they were like war gaming this and they said, okay, we're going to put these threats on and we want our other countries to take it seriously, they would want the stock market to decline.
Yeah.
Because if the Dow and S&P were rallying, they'd be like, no, generally a commercial that did it. And then what percent is able to be passed as a higher price?
All of it.
Why do you think tech stocks are getting hit so hard? You wouldn't, if you made a list of the economically sensitive sectors of the market and then you weighted that list by how much or how little they require the passage of goods to cross borders. I understand the NVIDIA angle, I guess, but just generally speaking, I'm watching Netflix.
Netflix is down 8% today.
I'm watching Netflix lose a fifth of its market cap slowly and then quickly. I don't understand.
Yeah. I mean, I can see two things happening. One is people are betting on a consumer that's weaker. I mean, that's why even Fed fund pricing of more cuts is moving up.
Yeah.
But the second is tech companies are global companies and they're going to be the retaliatory victims. Like that's the easy person to do sanctions.
Right.
And now they're assessing how much damage it's doing to the economy before tariffs. And this is the thing, like we know a lot of the supports have been rolling off at the start of this year. That's why consumption's down. And then tomorrow's a jobs report, but already it's foreboding, like the Challenger job cuts, ADP. You know, if we get a 50,000 jobs report tomorrow, there is not really, there's a huge question on this dual mandate because full employment, I mean, we're risking, a real collapse in the employment market.
Does the market rally or get killed on that sort of print? I think it gets killed.
What, a bad jobs report?
Like that bad?
Yeah, I think there's a panic, but then there's a rally.
Yeah.
Because I think the Fed put is back. And then I think the Trump put has to come back.
The Fed wants to cut. So this does enable the Fed to cut. It's just not the circumstances under which it wanted to cut.
Yeah.
I don't think the Fed wanted to have to cut. I think the Fed liked the position it was in where it was like, we will if we need to.
Yeah.
Then maybe we'll do one. Maybe we'll skip a month. Like that's where they were. They can't be there still. Now they have to. Now they actually might have to react.
Yeah, I mean, in a way, things they're trying to accomplish in China itself. So, I think, of course, a lot of that is gamesmanship, and the intention is, if I was China, I would say that because I'd want the S&P to fall more. Because if the S&P falls enough, then the White House put comes back. So it's I mean, the stock market is kind of caught in the crosshairs. Right
I
now.
assume you don't see a bear market coming, like a full-fledged 20%er.
Like it's possible because it's been a couple years, but this would have to be because there has to be a layered shock on top of this. Like if the Fed, like for instance, if somehow the Fed decides that the economy's weakening, but they choose to fight inflation and let a recession happen. So in other words, the idea is, well, we've been wanting a recession to kill inflation, like let's just let it happen.
Yeah. Then
of course we're going to have a big drawdown. But that would really require a Fed that decided the employment mandate wasn't important because, a recession, we just, like once a recession starts, there's no such thing as like we can engineer a mild recession. I mean, it's like you could have you'd actually start to see real trades happen. And so maybe home prices
There'd
actually
still be
step
so
down.
much more demand than supply, even if supply gets unlocked. Chartkin Matt made a chart that I smelled it was a timely special. And of course, all credit to you, this is a timely special. It's the VIX 1 month contract above the 4 month, which in recent memory has marked a bottom. Daniel, this is chart 6B, please. Too early to say? What do we think?
Wait. Can you explain this?
Tom, why don't you narrate this?
Yes. So it's going to take a minute or two. The VIX.
We got time.
Yeah.
We got time.
Most of us think of the VIX as a spot index, like, oh, it's measuring the expected volatility over the next 90 days. So that's what the spot VIX is. But it's actually a financial product. And people trade VIX contracts, but nobody trades spot VIX. They trade the 1 month VIX, 2 months, 9 months. I think there's even 24-month VIX.
Right.
The normal VIX futures curve is upward sloping, which they call
Either contango or backwardation.
yeah, like it's sector. So that's actually a positive that this is being redistributed in that way, the spending.
Yeah, but it's ugly in the short term.
Yeah, because it creates distortions. And
Well,
that's-
you're gonna see one in the next employment report or the one after that
yeah.
because
Yeah.
it's thousands of people. Like it's not a small
Yeah,
number.
jobless claims in Washington, D.C. have quadrupled.
Yeah.
So-
Okay. So there's a component to this that's beyond just tariffs. It's uncertainty about employment,
Yes.
and that's what's creeping in, and
Sure.
that could feed on itself.
And by the way, that's why it's hard to say, how could this be inflationary? Because if people say wages create the second wave of inflation, but we have a softer job.
I don't think it's inflationary at all, and
Yeah.
I disagree. It might
Yeah.
be there might be some commodities where there's a dislocation, and it's short term inflationary, but I don't think government austerity is inflationary.
Yeah,
I don't see it that way.
that's right.
Okay.
And yeah, I don't know if you guys track Trueflation, which I've kind of found is actually pretty decent.
Okay.
That's now at 1.4% year over year.
That's what they think is the current rate of inflation.
Yeah, using like 2 million consumer items. And then they map it to the BLS category.
One more thing on economic data then, since you brought that up.
The probabilities are very remote because if you look at all bull market major tops before a 40% drawdown, since 1900, all of them could have been predicted with a 40-year lead time based on births
So you think
and
so
immigration deaths.
that demography thing
Yeah.
is still enforced no matter what they do to try to mess it
Yeah,
up.
that's right. Because if you cut the population by just 20-year intervals and you mark the peak of each cohort, it marked the 29 top, the 74 top, the 99 top, 2018 top, and the next major top shouldn't be till 2038.
So you're not talking
Wait,
about
hold
the
on. He was
cyclical
about to
bull.
say, wait,
You're
20
saying,
what? What was the year?
2038.
All right, I feel better now.
but you're not talking about the cyclical bull market then. You're talking about like the 09 run up until
Yeah,
now.
so a major,
Okay.
the kind that could unwind the entire bull market.
All
Okay.
right, so we have more than a decade. I feel better now.
So we're okay.
There's also some seasonal stuff going on that I think you'll find interesting, Tom. This is from All Star Charts. I think this is Grant's work. Year one of a bull market, obviously, up and to the right. Year two of a bull market, by definition, up and to the right.
Or whatever you'd call it.
Okay. What's this one? Are we doing this?
Yeah, we could skip that one.
Okay.
Tom, you were bullish earlier. I don't know if you still are about small caps, and I think one of the reasons why we have your chart is that the S&P is driven largely by tech stocks, but the Russell 2000 has much more exposure to rate-sensitive industries. So, is the thinking that if the economy weakens and rates go down, that the Russell would maybe go down less than the market, or do you think that it would outperform in a bull market? What's your thinking here?
I don't think if there's a recession, small caps outperform. So like on that downside, I don't think it's protected. But if we look at the composition here, I actually am surprised it's done so poorly because, for instance, healthcare's the best performing sector year to date, and you can see healthcare is a bigger weight in small caps. Financials have done well year to date. It's a bigger weight in small caps. Industrials have outperformed year to date, and it's a bigger weight. You have less exposure to tech. And
So what's weighing the small caps down this year?
I think it's the push button because
Just
there's-
people saying sell small caps.
It's higher beta.
Yeah, so they're derails. And you had to hire workers to actually manage all these people. And
And
then
to
you
hire
have,
workers to deal with migrants who are not
Yeah.
coming into the country and getting jobs.
And then you have to give them EBT cards. So it's actually all inflationary.
Yeah.
Italy shut their, or reduced their border crossings, and it had the same profile of not highly employed crossings, and their economy is doing better.
Okay.
And actually, they haven't. It's not led to inflation. It's actually led to actually improved growth.
Okay. So this is not something that we need to worry about stoking inflation, having less migration.
Yeah, I don't know how it's going to be implemented, but if ISIS is not, they can't boot 20 million people, but if they're targeting criminal gangs and stuff,
Yeah.
I think it's actually going to be positive social fabric.
Well, I do too, and this is what the people voted for this
Yeah.
time around. This was like a really big issue.
Yeah, and for someone who thinks Trump doesn't like migrants or immigrants, all of his properties employ many people on.
Shh, don't say that.
So I think he knows.
The mics are on. Yeah. All right. And he's a builder.
You're not trading them.
Yeah.
So we're trying to find essentially what's equivalent of like your idea of permanent stocks. But we do rotate it. But the reason we sort of have this idea is we have themes that like span multiple decades. Cybersecurity, millennials, AI, Fed cycles.
Okay. So your idea is that these are stocks that are enduring. The story behind them
they're
is bigger than the stock itself.
Yeah, they're linked to generational ideas.
Okay. I love that idea.
And we only add a stock that appears in more than one theme. So you want to say like, hey, these are the stocks most linked to cybersecurity, but let's say that's 50 stocks. But then we want to say, is it linked to any of the other 6 themes? So it has to be appearing at least 2 themes because then we figured there's 2 legs to support why the stock
so
will
if
always
one
work.
story goes away, it's on there for a reason.
Yeah, it's anchored. Yeah.
Okay.
Does that mean that you wouldn't own a stock like CrowdStrike, which is like purely in one?
Bitcoin. So I think even if it's not like millennials need to buy gold for gold to go up. You just
Okay.
need the boomers to hold it.
You need central banks around the world to buy it and hold it, which they are.
That's right.
Okay. Do you get involved in any of these conversations about Bitcoin reserve? Like, are you talking to people that are involved in this at all, or not really?
Well, there is. I'm not going to the White House this week. I'm
Okay.
not invited, but
Okay.
we do have conversations with Congress people.
Okay.
But
Are they like, Tom, what do you think if we do this?
Do you think it's a good idea?
like, can you pump my coin?
Yeah,
Is it a good idea? Why would we have a Bitcoin strategic reserve?
I think it makes a lot of sense.
Why?
Well, we already have one. We've confiscated Bitcoin.
That's not all right. But why do you think it makes sense?
Why should we buy more?
If Bitcoin becomes the backbone of a new financial system, which it really is, it's the king of the remittances. It is the immutable blockchain, and people have a lot of reasons that they trust it. In 14 years, no one's broken it, and there's no replacement.